past 30 years. Most of the expertise is focused on the tax consulting practice and have worked in multiple international engagements interplaying with the Puerto Rico tax incentive. He will be speaking about Act 60 and he will include other tax incentives. Please help me welcome from Kevane Grant Thornton, Francisco Luis.
Good morning. Bienvenidos a Puerto Rico. It is a pleasure to be here. I have the honor and the privilege and the great opportunity of presenting you the Puerto Rico Tax Incentives Code. You heard Secretary Lavoy and Roderick talking about the incentives and Act 20 and Act 22. So now I'm going to give you a nutshell. I say it's a pleasure and opportunity. It's also a challenge. It's a 500 almost long document that I have to summarize in about 20 to 25 minutes. So hang in there. I promise I'm not going to get technical, but I hope that you at least get an idea of how these incentives work and what's the interplay with the federal tax regime as well. In case that you want our contact information, and here is, also you have an email address that you can access in order to join our mailing list. We publish a lot of tax alerts and a lot of tax information regarding the Puerto Rico tax system. So here you have that link. And this is the agenda that we are going to be covering in the next 23 minutes. Basically, I want to give you a nutshell of how it's Puerto Rico as a tax jurisdiction in order for you to understand how the incentives work. We're going to give you what was approved in July 2019 with the new regime. And among the incentives, I'm going to be addressing 4 of them. During the rest of the day, you're going to have other panels that will go over the rest of the incentives. But these are the incentives that we are going to be discussing. We're going to talk about the relocation of individual investors to the island, also about the export activities. Those 2 are what we used to refer as Act 20 and Act 22. Now we don't have those acts. We have the incentives code, and we have a chapter for each of the incentives. In addition, we're going to give you what's the status about the private equity funds and how they end up in the incentives code, and also the traditional incentive that we have had for over 80 years already in Puerto Rico, which is manufacturing. Those are the incentives we're going to be addressing. So Puerto Rico as a tax jurisdiction. As you know, Puerto Rico is a U.S. jurisdiction, is a U.S. possession. We are on U.S. soil when you are in Puerto Rico, as you were in the mainland. In terms of currency, as you probably have seen, we use the dollar bill as well. Puerto Rico-born individuals are U.S. citizens. We don't have to apply for U.S. citizen. We are U.S. citizens by birth. As you know, Puerto Rico has a privileged location. We are right in the middle of the Caribbean. As Secretary Bacó mentioned, we are the southwest point to the mainland, to the United States. And we have direct access to direct flights to most of the east coast of the United States, and also some European countries as well, like Spain, for example. We have a direct flight throughout the whole year to Spain as well. Population in terms of in Puerto Rico, in 2017, prior to the hit of the hurricanes, we were about 3.2 inhabitants here in the island. After the hurricanes, we have had what I call like a temporary exodus. Some of those that left are already coming back, so that's where we are. Puerto Rico is being part of the U.S. Census that is being conducted in 2020. So after 2020, we're going to have a more exact figure of what's the actual population that we have. And this is very important, but Puerto Rico businesses and individuals are protected not only by the Puerto Rico Constitution, but also the U.S. Constitution, which rules here in Puerto Rico. Now, this is one of the most important slides that I have for you today, and it's what's the cornerstone of Puerto Rico in terms of how the Puerto Rico has been able to develop the strategy for the incentives. And it's the fact that even though we are U.S. citizens, there's a section in the U.S. Code that says that Puerto Rico bona fide residents don't have to include for federal taxation the Puerto Rico source of income. So 2 important terms here, residency and source of income. And we're gonna get to there soon, when we're gonna discuss about the new residents. And that's on one side. On the other side, Puerto Rico entities, like for example an LLC or a C Corp that you create or organize in Puerto Rico, is considered foreign for purposes of the US. So unless that entity doesn't have activities in the US, that entity is not subject to federal taxation. It's isolated. It's a foreign jurisdiction for tax purposes. And this has been the combo that Puerto Rico has used to, as long as you can generate Puerto Rico source income using a Puerto Rico entity, you are outside of the federal tax regime, and Puerto Rico has used this to develop the tax incentive strategy. So let's go to the first incentive, which is the one for the new residents, what's called Act 22. This incentive provides you 100% exemption on 3 types of income: dividends, interest, and certain capital gains. It's not all capital gains, it's certain capital gains. But these incentives, in order to really hold through, they have to be for Puerto Rico source, from Puerto Rico sources, because otherwise, since you are a US citizen, even though you are living in Puerto Rico, if you have interest income or dividend income that is from sources outside of Puerto Rico, it's going to be subject to federal taxation. Puerto Ricans have to file federal taxes if they have income that is not from sources from Puerto Rico. So the real benefit of this incentive, if you can earn this type of income from Puerto Rico sources. In the case of capital gains, the source is determined based on your residency. So that's one of the most attractive incentives for the new residents. Capital gains with respect to the certain capital gains that we're gonna mention which are. Let me go back to the resident. This is where I was, sorry. So in addition to that, the residency period in order to apply for this incentive, you could not have been a resident of Puerto Rico for the 10-year period prior to the enactment of the Puerto Rico Incentives Code, which was July 2019. So this requirement has changed in the past. Previously, when Act 22 was approved in 2012, the period for where you could not have been a resident of Puerto Rico was 15 years. So you could not have been a resident of Puerto Rico from 1997 to 2012 when Act 22 was approved. After that 15-year period was reduced to 6 years, and now we have that is a 10-year period. So you could not have been a resident of Puerto Rico from 2009 to 2019. In addition, now these new residents have to make an annual contribution to a Puerto Rico charity that is in an amount of at least $10,000. This was one of the changes that the new code presented, because that annual donation was of $5,000. They have now a new requirement which came back because we used to have this requirement before, and is that the new resident has to acquire a residential property here in Puerto Rico and must live in that residency exclusively. This means that, for example, you cannot use that property for other purposes other than using it as your personal residency. You have 2 years after you become a resident to acquire this residential property, and it's very interesting because the statistics that we have for the new residents is that almost 70% of the new residents have already purchased a residential property in Puerto Rico, even though we haven't had this requirement for the entire period that the incentives have been enforced. So I was referring about certain capital gains when we were discussing the exemption, and it only applies to capital gains that you earn from a security. And now the incentives code have a definition for securities, which we didn't have under Act 22, and that provided a lot of creativity with Act 22 to what was a security. But with creativity, you get into gray areas and you have to take positions. Now you have a clear definition of what is a security, which is obviously any note, bond, promissory note, stocks, shares, etc. In addition to that, there's another category of assets that is covered under this incentive, which is other assets that includes commodities and the Bitcoins, the virtual currency, which is also now covered expressly for the new incentive for the new residents. The section that I was referring to about the exemption that we have as Puerto Rico residents is Section 933 under the U.S. Code. It's under that section that we are bound to the fact that we don't have to pay federal taxes on the Puerto Rico source of income. And obviously you have to be a bona fide resident of Puerto Rico, and that term is also defined in the U.S. Code. You have to meet the criteria not all for Puerto Rico tax purposes, which we have a different definition, but for U.S. tax purposes. And in order to meet that criteria, you will have to meet 3 tests. The present test, which is the most commonly that we hear about being in Puerto Rico more than 183 days, but there are other alternatives to meet that test. The tax home test, which is that you have to have your principal place of business here in Puerto Rico, and the closer connection test, which is the one that you meet when you demonstrate that you really are living in Puerto Rico by having your immediate family here in Puerto Rico, your personal belongings in Puerto Rico, etc. There's a lot of materials that we can use to refer to this test, and I'm not going to get technical, but I just wanted to mention that you have to meet that criteria as well. So let's move to the exportation of activities, what we used to have as Act 20. The incentive here is that you're going to have a 4% flat tax on the net income that you earn from sources within Puerto Rico. But if you earn that to an outside market. So the main requirement here is that you have to serve an outside market. It can be the US, it can be a related entity, it can be Europe, it can be anywhere in the world, but you have to serve an outside market from Puerto Rico, and you're going to have this 4% flat tax on the net income that you earn from those activities. And it's a flat tax because there's no tax on distributions. One of the changes that we had with the incentives code is that we used to have a 90% exemption on property taxes and 60% exemption on municipal taxes. Those exemptions now are modified to 75% for property taxes and 50% for the volume of business tax, for the municipal taxes. The benefits now are secure in a 15-year decree, and this is very important, I have to mention. All of these incentives are sealed, if we may say, in a contract that you will have between the recipient of the incentive, which can be an individual or a business, and the government of Puerto Rico. And even though there may be changes in the law, those incentives are going to be grandfathered until the end of the term of the decree. And the decree in this case is for 15 years, and you have the chance to renew that term again for 15 additional years. In terms of eligibility, now any natural person or legal entity can apply for the incentives for export activities. Prior to under Act 20, the incentives for Act 20 were not available for individuals, but now a natural person can also apply for the incentives. And the code expressively says that you can provide the services within or without Puerto Rico. So if you are exporting services and you have to go outside the Puerto Rico jurisdiction to provide the service, that's also going to be covered under Act 20, under the incentive for export activities. But be careful about that foreign jurisdiction, because typically when in the place that you provide services, that will trigger the taxation. So if, for example, if you have to go to the US to complete the service because you have to go to the field, and the field or the implementation is in the US, you may be generating taxable income in the US, even though everything's going to be covered in Puerto Rico under the incentive. So you may have a double taxation there that you can credit in Puerto Rico, but the effective tax rate is going to be over the 4% tax. So the ideal scenario is that you provide the service from Puerto Rico, even though you have the flexibility to be outside. In terms of requirements, now we have an express requirement in the law about employment. And this has been also a changing factor that we have had with the export activities. When Act 20 was approved in 2012, there was no employment requirement. After that, there was an employment requirement because we used to have employment requirement that we have to employ at least 5 employees, and you had up to 2 years to employ those 5 employees. And now, The requirement that we have is that you have to employ at least one employee once your gross revenues exceeds $3 million. It's kind of easy to meet that requirement because there's no way that you can provide all of those services without employees. And remember that when you are exporting services and you are entering into the international arena, the substance of the function that you have to have behind those international transactions is critical, and you demonstrate substance by having functions and employees in the jurisdiction that you are. These are the list of eligible activities that we have for export services. One of the most common is consulting, which is approximately 40% of the decrees that has been issued are for consulting services. But one of the three top eligible activities is not even listed because the Secretary of Economic Development has the authority in the law to issue additional service activities. So this is a non-inclusive list, if we may say. In addition, one of the changes that the incentives code is provided is that now we have a new category for export activities, which is expressly for trading activities. So you can engage in trading activities from Puerto Rico, like for example, acquiring products outside of Puerto Rico with a direct drop shipment outside of Puerto Rico. Those trading activities, even by means of commission, you can engage those from Puerto Rico, and that profit that you generate is going to be subject to the 4% tax. In addition, if you can distribute products that are manufactured in Puerto Rico to an outside market, that's also available under this incentive for trading. As I mentioned, the private equity funds are now part also of the Puerto Rico Incentives Code. We have a chapter for the Incentives Code that is for finance and for investment. And there we have incentives for the international insurers and also for the international banking. And now we have, as part of the incentives regime, the private equity funds. 10 years ago, we didn't have any legislation in Puerto Rico for private equity funds. Back in 2014, Act 185 was approved with a genuine intent to develop this industry of private equity funds. The truth of the matter is that that industry didn't start really as expected, because there was a lot of uncertainty for the investors. Those funds were created just by creating an LLC, and they just filed an election to be treated as a private equity fund with Treasury, which no one responded. So based on that, the private equity funds had a lot of due diligence aspects when investors wanted to invest. Now, one of the main benefits that the private equity funds have is that they're gonna get a tax exemption decree as well for 15 years. So that provides a high level of certainty for the investors about the tax treatment of the private equity fund. The fund must continue to raise at least $10 million in capital, and it will have 24 months to raise that capital. Prior, under Act 185, one of the requirements of diversification was that at least you have to have no more than 20% in a single business, and related entities were counted as a single business. Now that 20% diversification requirement was increased to 50%. So there's more flexibility now for the private equity funds. One of the most important incentives is for the investors that they get deduct up to 60% of the amount that they invest in the fund, and you're going to have 15 years to use that deduction. You're going to have a limit of 30% of your net income per year, but 60% of the actual amount that you invest, you're going to get a tax deduction for that. That was also true under the regime with the Act 185 as well. And on this chart, you have what are the incentives? As you can see, for example, in the case of dividends and interest, There's a 5% or 10% taxation. It depends on which investor you are, if you are the general partner or the limited partners. In the case of capital gains, it may be 2.5% or even exempt as well. And if you sell your interest in the fund, it's going to be subject to a 5% flat tax as well. So the incentives are really good. And for the ordinary income, remember that you have the 60% deduction for the investment that you made, that you may also use. In terms of manufacturing, as I mentioned at the beginning, manufacturing has been the main area of economic development in Puerto Rico over the past 80 years. It's with these incentives that Puerto Rico was transformed from an agricultural industry to the industrialization. And this is how the big pharmas came to Puerto Rico in the 50s and 60s. And as they were mentioning, Medtronics and most of the big companies are here under this regime. Basically, any transformation of raw material into an article of trade will qualify for these incentives. But the incentives is more than manufacturing. It also, we have seen a lot of technology companies here also under these incentives. And there are a lot of eligible activities, as you can see here. In terms of the benefits, here also the incentives are secured in a tax exemption decree for 15 years, and you can renew that for 15 additional years. Also, as in the case of export activities, the incentive is for 4% flat tax. There's no tax on distributions. And if you have to pay royalties, the normal regime in Puerto Rico is that you have to withhold 29% of those payments. In the case of these incentives, that withholding drops down to 12%. There's also a 75% exemption for property taxes. A lot of inventory in Puerto Rico is subject to property taxation, so you have 75% of exemption. And for the volume of business tax, which we have as part of the municipal tax regime, is also subject to a 50% exemption. I want to show you one chart here that I have in case that you have made your research about the Puerto Rico tax incentives law, and you want to know where they end up in the incentives code. This is the prior acts that we had in Puerto Rico, like for example, Act 22, Act 20, and the way they ended up in the incentives code that is now covered in different chapters. We have a chapter for individuals, we have a chapter for export activities, as we mentioned, also for finance and investment. For the visitor economy, which is for the tourism activity, I haven't mentioned anything about tourism because that's going to be covered in a separate panel, but those are great incentives because you not only have tax incentives, but also you have a tax credit for the tourism. Manufacturing, which we discussed as well, infrastructure, which also cover energy, and Secretary Lavoy was mentioning about a lot of energy businesses being developed in the island. Agricultural is also part of the incentives code. The creative industries, which is those for the film industry, and also the opportunity zones, which is like the big play that we have right now, and that's going to be discussed deeply in a panel just a few minutes ago. But honestly, there's no regime there's no regime like Puerto Rico when we're talking about opportunity zones, because we have the fact that we are in a foreign jurisdiction, and for the first time, we have the opportunity that you can have federal taxpayers investing and deferring their taxation in the U.S. by investing in Puerto Rico. But I don't want to get more of the opportunity zones because that's going to be a separate panel right now. I have 90 seconds, so thank you so much for your time. I hope that it was helpful for you, and in case that you want to talk, we can chat in the breaks. Thank you so much.